morning. Thank you, Danielle. Thank you, Darshan. Thank you to all of you who, many of you in this room, have been actively working on this question of what comes next. That includes proponents and some constructive critics, and we need both. To Danielle's point, we will do this only by the kind of refinement that constructive debate is essential to. And so I have had the privilege of helping to call this question of what comes next from my perch at the Hewlett Foundation, which gives a little bit of a bird's eye view, I think, on sort of where we are. And so it's in that spirit that I wanted to share a few hunches on where it is I think we are. So in the past, we've seen patterns in how a new dominant paradigm will emerge. So during the Great Depression, FDR pushed a Keynesian approach, driving up aggregate demand with state spending, and he was responding really to the problems of his day, namely the ones seen in the Great Depression and the diagnosis of that being foremostly a lag or a lapse in demand. And his approach worked so well that you saw Democrats hold the presidency for 20 years. When a Republican, Dwight Eisenhower, finally won it back, it was on a platform that largely kept Keynesianism intact. In other words, you had a set of ideas that were largely brought forward into the real world, the political domain, by one party. They worked well enough that you saw a kind of acquiescence across the political spectrum. We saw that same pattern repeat with Reagan's neoliberal revolution. We saw then 12 years of Republican gains, followed by Bill Clinton, who ran on a so-called new democratic platform that tacitly accepted a lot of Reagan tenets of neoliberalism as a baseline for change. So now we've found ourselves in a new set of circumstances. Neoliberalism is over. Maybe that's a debatable proposition. I don't know. We'll find out over the course of the next day and a half or so. And there's a broadening consensus that treating markets as ends in themselves has damaging consequences. The new order will be defined by whether we intentionally shape markets to serve a set of worthy, democratically determined goals. But the how of this is shaking out differently than it has, at least in the past two iterations of political economy consensus. What makes this time different is not just the dissatisfaction, but where it's coming from. And setting this change in motion, and setting their change in motion, FDR and Reagan really drew heavily from academic economists. This time around, I actually don't think that any one of us would claim that academics are leading this charge. It might be an uncomfortable thing to say in this room, and I think that many of us who think of ourselves as intellectuals are left uncertain at best about our roles moving forward. Instead, we really see politicians from both parties seizing the moment. They're saying neoliberalism has failed us and that we must move beyond it. And we see this happening not just really from one corner of the political spectrum, but from across it. You have, in the center left, senators like Chris Murphy saying, and I'll quote, neoliberalism has delivered a fragmented, atomistic, balkanized culture and a dog-eat-dog, winner-take-all economy. From further left, you have Representative Ro Khanna saying, I'll quote, it has decimated the working and middle class in America, robbing them of 25% of their wealth, enriching top investors and multinational corporations. From the right, Senator Josh Hawley says, neoliberalism is nothing sacred. It is not inevitable. It was a choice, and we have it in our power to choose differently now and for the better. You see a kind of floodgate opening from across the political spectrum where both parties are actively campaigning against the economic order that has governed for the past 40 years. I don't think that's a vibe shift. I think it is the beginning of a structural one. And I think it is interesting and different that is coming mostly from the non-academic realm. I think that, again, raises questions of what our role as intellectuals or academics properly understood should be. this time around. But so by the late 2010s, the critiques of neoliberalism were becoming widespread. And I think in the Biden years in particular, you saw policymakers building on not just their staff's work, but certainly the work of many advocates, think tanks, yes, academia, were bringing these critiques to the forefront and really crafting a new model. And we saw that in the mounting public investments in backbone infrastructure of our economy, be it physical, technological, or energy. We saw it in a willingness to craft a trade policy paired with those investments in the form of surgical tariffs. We saw it in pre-Borkian antitrust enforcement to curb monopolies, unabashedly pro-union stances, place-based investments to heal communities hit hardest by decades of unfettered globalization. In monetary policy, you saw a willingness to resurrect a dual mandate, both full employment as well as price stability, alongside a return to the view that different flavors of inflation require different responses. This was a departure from Milton Friedman's view that those sources of underlying inflation don't matter. Interest rates are a fine enough fix for it all. For the most part, though, these were piecemeal endeavors. What there was too little of was a willingness to roll these discrete dimensions of rethinking in different policy realms into some larger account, some new account that was rooted in the first instance, a set of descriptive claims about how the economy really works. Which brings us, I think, to today's conference, to the here and now. Whether we like it or not, the post-neoliberal world is being built around us, and there are no guarantees that what follows will work better or even work as well as neoliberalism has. So I think it's important as we kind of begin the work of refining to understand that the previous model was never apolitical. It simply embedded its value judgments into a set of descriptive claims and ostensibly neutral tools like cost-benefit analysis, like other tools that came about in the kind of beginning stages of neoliberalism that rather than these things were, had a lot of normative content baked into them, but on their face, they were more descriptive than they were normative. This certainly was true of Keynesianism as well as neoliberalism. And I think it needs to be the starting point for any next paradigm, any successor. So I will take a stab at laying out three of them. First, markets left to their own devices tend to concentrate power and broaden economic disparities, partly because as long as returns to capital outpace returns to growth, thank you, Piketty, inequality will widen, we know this, and partly because as much as we consumers love competition, firms hate it. The result is fewer options, worse service, higher prices, lower pay, less innovation, and generally less agency over our own economic lives. These accumulations of power warp our markets and then our politics, and only government can correct these power imbalances, whether between bosses and workers, finance and the rest of the economy, big corporations and their smaller competitors, and consumers, or China's state-driven economy and its trading partners. So this kind of trio of claims has always been true. I think they are especially true today when so much of our economy runs on industries that are characterized by network effects and positive returns to scale. A whole lot of this work about building a set of descriptive claims needs to begin with the question of what is different about today's economy, today's markets, as compared to 30, 50 years ago. So call this first point balance. Second point, markets are a tool, not an end unto themselves. And our government's job is to set national aims and then shape markets to serve them, breaking through bottlenecks, be they private or public in origin. And so while traditional markets are fine for many, even most things, the weight of experience over recent decades tells us that they are frankly less adept at providing a lot of our essentials, decarbonization, a manufacturing base, sufficient quantities of housing, childcare. And so these markets in these essential areas need to be organized and supplemented by active government policy. Call this build. Third stylized fact. Most high-level economic debates sort of shake into one familiar argument. Should we focus on growing the pie or dividing it up more evenly? But as Michael Sandel and Danielle Allen and many political theorists that subscribe in part or in whole to the tradition of republicanism, as they have argued almost more forcefully than anyone, when we are focusing our economic debates on questions simply of growth and distribution, we are bypassing the more fundamental question of what is actually in the pie. Is the pie even delicious? Is it nutritious? Do we like pumpkin? If we like the democratic part of democratic capitalism, these questions matter. And it is becoming increasingly clear that the last 40 years of defining freedom merely as maximizing individual liberty and consumer choice has left Americans lonely, depressed, addicted, unhappy. Many of us feel poorer, and many of us are poorer. As the kids might say, the vibes are bad, even if the pie keeps growing. And so the most urgent example of this, of course, is the social media market, where platforms inevitably trend toward not just monopoly consolidation, but the most addictive timelines possible. That's because time on platform means money for operators, but optimizing for time on platform rewards outrage over truth, amplifies conspiracy theories, incentivizes hate, and ultimately produces a lonelier society and a more politically repressive one. This is not to say that what many of us think of as individual liberalism doesn't matter. It is instead to recover this tradition of republicanism, which stresses that freedom depends on sharing in self-government. Liberalism without republicanism fails to deliver on its aims of bolstering individual choice, leaves larger questions of meaning unanswered, and allows authoritarians to propose their own solutions. It neglects the extent to which people want a say in shaping the economic forces over their lives. In short, bringing liberalism and republicanism back into greater parity, into greater balance, may be the key to saving liberalism itself. That means you don't need to sort of agree with Danielle or with Sandel on the kind of importance of republicanism on its own terms, perhaps, even if the project of liberalism is mainly what's important to you. I think there's an argument that what that requires is actually some greater role for understanding freedom as a team sport. The two are understood better as codependents than as competitors. So recovering this tradition of republicanism, this willingness to discern healthy flavors of pie from less healthy ones, ultimately boils down, I think, to two questions. What kind of economic arrangements best enable our civic life? And what steps are necessary to return a sense of agency to people over the economic forces governing their lives? I don't have a label for this. Maybe Danielle does. Maybe we can ask Michael his favorite flavor of pie. I'll see him today. I'll report back. But this point about a greater respect for understanding how economic arrangements can buttress our civic life is actually finding a lot of adherence, again, across the political spectrum. And it has become trendy in a way for a lot of these proponents to use this interrogation of the contents of what our markets are producing and their sort of health or not for our democracy as a way of swiping at other legs of the stool that I just laid out, especially the balance point that I started out with, arguing that the greater competition in markets is not going to sort of see us to a healthier digital life. I would kind of reject the idea that any of these individual stools, any of these individual legs of this stool are sort of alone sufficient. I don't think anyone would argue that. But notably, whatever the answer to a healthier digital life, it will need to contend with the realities of a lot of market dominance and a lot of economic clout from large tech companies. So last point, I'll end here. Ultimately, for these paradigms to succeed, they need to work. They need to touch down by faring better on the problems of the day. And the fact is that we have seen a fair bit of experimentation during the Biden administration's post-neoliberal turn. Imperfect, I will be the first to admit, but it did move the ball on the major questions of the day. On growth, the US emerged from COVID with the strongest post-pandemic growth among G7 nations. On inequality, inflation-adjusted wages went up and went up most for low-wage earners. Research by David Autor, Aaron Dubé, Annie McGrew show that wages at the bottom rose so much that wage inequality shrunk, undoing 1/3 of its rise since 1980 during the Biden years. On climate change, the projections on the IRA looks like it left undisturbed would have reduced emissions in the United States by 40% over 2005 levels, and by the end of the decade, and by as much as 48% come 2035. It would have amounted to some $1.2 trillion in public investment, unleashing another $3 trillion or so in private green investment. This should have meant about 9 or 10 million jobs over the next decade in clean energy. On geopolitical risk mitigation, the US, as of several months ago, was manufacturing enough solar panels to cover its domestic demand. No one ever claimed that these policies were perfect, or importantly, that they don't come with trade-offs. The problem is not that there aren't trade-offs, it's that for the last 4 decades, they have been falling on exactly who you would expect based on ex-ante distributions of political power. But by actively working to shape the foundations of this new political economy consensus, we can minimize those trade-offs. I think this is best seen in the area of inflation and secular stagnation. These are probably the 2 predominant anxieties that have kept most economists up at night over the past decade. But by essentially shifting the productive muscle of the US rightward, the productive capacity, you minimize inflation and you begin to grow aggregate demand through investments on the supply side. This is what thinkers, academics, policymakers like Janet Yellen have called modern supply side theory. But the more important reason to join this conversation is not simply to shave down trade-offs, it's that there's no guarantees that what supplants neoliberalism will work as well or better as neoliberalism itself has fared. I think we are all aware what comes next could prove darker than what is replacing. But there is a good movie version that remains well within our reach, and I think the particular competence of universities, academics, rooms like this one is both to roll up a lot of the green shoots of rethinking in these discrete policy areas that I just mentioned into some larger story. Humans convey knowledge through stories no less in political economy than in other realms. And it is also importantly to fill in the details. I know Heather Bechet is speaking in a bit later today. She can tell you how many times I have prodded her through my work in implementing the IRA for a fiscal multiplier for our public investments as a way of being able to adjudicate the all-important policy question of whether we can afford it or whether we can afford more investments like it. So I want to thank you all for participating in this discussion. It's really an exciting time to be doing this work, and no matter your political views, I think we can all agree that getting this right is urgent, and it's not clear we'll have a second chance. So thank you all.